if I simplify it totally, you can use a lot of things to value Bitcoin. You can use indeed the non-zero addresses. You can use the transaction volume or the UTXO volume or the hash rate to make the link with the miners, or you can use the stock to flow ratio, or you can just use time as an adoption variable.
Yep.
And basically they all show you one thing, that the price goes up and to the right. There's basically two scenarios. One is the meme stock scenario, and in low interest rates environments that we have had, a lot of money will be misallocated to maybe not so good investments, meme stocks, and I'm quite sure that institutional investors who are, well, at least in Europe and at least the ones I know, not very fond of Bitcoin, not very known to Bitcoin as well. I know for Fidelity that's very, very different. It's like the white raven out there, but a lot of institutional investors see Bitcoin as a tech stock. And maybe even a meme stock. So one of the candidates that will go down when interest rates go up, and this misallocation of capital into the funny stocks unwinds. So that's one scenario. The other scenario is, of course, well, Bitcoin is more like a commodity, or a currency even, with a yield curve or an interest rates at least not that far out as the US dollar, but at least 1 year out, and a Sharpe ratio of well, at least higher than 1, which is very unique for Bitcoin. It has very high volatility, but the upside potential is even higher, so it makes a very crazy investment actually. One that has not, it's the only one out there with return above volatility. And yeah, I think there is also an arbitrage relationship there with interest rates and with currencies that and we didn't talk about it, but we talked about the link between the rates, the interest rates, the bonds, and the equity market. We didn't, but there's also a very tight link, maybe even tighter, because it's a direct arbitrage and it's also mathematical, between foreign exchange and interest rates. So, for example, the 1 year interest rates in Europe is minus 25 basis points. The 1 year rate in the US is 1.25, I guess. So there's 150 basis points between them. If the US is going to raise interest rates and Europe is not, that makes the dollar more interesting, more attractive, and money will flow to the dollar will get stronger. And there's a very direct arbitrage relationship with futures, of course. You can buy dollars or sell euros right now or 1 year ahead and capture that spread. And if you look at Bitcoin as a currency, you can do the exact same thing through the exact same mechanism, namely the futures. So you can lock in, and currently it's low, but you can lock in like 8, 9, 10% in futures contango premium, with and finance that with negative yielding euros, for example. And I think maybe I'm so much focused on it because I'm in Europe and the rates are negative. So, but yeah, I see Bitcoin as a unique asset with a asymmetric upside, a positive Sharpe ratio, and a direct arbitrage with fiat currencies. So that is the total opposite than a meme stock. Yeah, well, those are the two extreme scenarios. And of course, I think the latter we'll see the latter, and not the meme stock scenario. But that will be the interesting thing to watch in the, well, I guess next couple of months.